here's a trade that I've been looking at and really considering getting a large position in. So it's really nice to find a stock that is absolutely hated and sold off for years and years and essentially misses the majority of the bull market. And then to see it just lying there and not really anyone interested in buying it, not really anyone interested in selling it. It just hangs out. And this is what I see in DreamWorks, and you can see it right here. So when we had the bear market bottom back in 2009, by the way, symbol is DWA, and for those that don't know, DreamWorks is the movie company that made Shrek, the many movies of Shrek, and Kung Fu Panda. They have the really cool animation that is really clear. So at the bear market bottom, this DreamWorks really picked up in volume, and this was good, and then something happened right here. But in April, it had something to do with fundamentals there, and they started deteriorating, and then it started selling off. And then we had a rally on low volume, and then we had more sell-offs on high volume. And then, what happened right here? Everybody lost interest in the stock. And this carried on for almost a year. And then we had our first signs of life, which occurred right here. We started to see volume pick up right into earnings. People apparently thought that there was something different going on in the company, but that was quickly sold off as their earnings missed. So back down to a little below the 2009 bear market low. And now we're trying again, and this time it looks like it's going to be more sustainable. We had a positive earnings announcement right here, and look at the volume picking up. These are new buyers that are enthusiastically coming into the stock and driving the price up. And we had another positive earnings right here. So it's looking pretty good. And for the technicians out there, the way that I like to see it is we had a major resistance level right here, and this was a premature breakout. So this was our first clue that the stock was doing well. And then we went above this level, and then it got above that level, and then we wanted to see it get to a new high, which it did just this week. Honestly, gapped above it on pretty darn high volume. So now it's time to actually buy into it. And notice that this is a weekly chart, and this stock, well, if you take a look at, I'll just go on to a 1-month chart, what this stock did last week, and then compare that to the Dow, and this is what the Dow did. You got to think that there's really some strength in this stock, because a rising market or a rising tide floats all boats, and a falling tide also sinks them or lowers all boats. So if DreamWorks can rise despite the market going down, then when the market starts going up, it's probably going to go up even faster. That's the nice thing about having outperforming stocks. So what actually caused this stock to start moving up so much is that the company is getting out of the very, very, very competitive movie industry, which is really hit or miss, because you can make a movie and no one goes to see it, and then you don't make any money off of it, and it has a lot of money initially to put down. So you can get a big loss if you make a flop of a movie. And like I said, there's a lot of competitors out there, such as Lionsgate and Warner Brothers. So they're getting out of that business, it looks like, and they're getting more into the TV networking business. And in the past few weeks, they signed a deal with the German company Super RTL, and they also signed a deal with Netflix to bring television programming. So like little half-hour things that you would watch as a Netflix subscriber, or Super RTL if you're in Germany, on their TV network. And these are promised contracts that have been signed and are now in force. So it's really changing the company from a fundamental perspective. So how are we going to trade this? Well, first, the way that you often measure these, you can say, all right, cup and handle, So you could do a vertical measurement, which would give us a target of about $30, or you could do a horizontal measurement, which will give us a target of just about $35. So remember, these are minimum targets. So if we're expecting to get the stock to $30, that's probably worth making the trade. Now, I'd like to mention, I took a look at the implied volatility for the options right now. It really spiked in the last few weeks. So buying options on DreamWorks right now, like standalone call options, it's probably going to cost you. It's going to be pretty darn expensive, and it'll be more difficult to make money. So if you do insist on using options right now, I would suggest using vertical spreads. You could do vertical spreads, or another one you could do would be you could sell naked puts if you wanted to. But remember, both of these have defined reward and defined risk. So if the stock goes to 50, you're going to kind of limit your gains. So the other strategy, short a put. And we also have to think about timing. So let's say worst case scenario. This stock is topping right now and is about to have a steep correction. Just like, let's just say the market's going to have a steep correction too. So where are we going to find support? I go down here and then go down to the next one. And what we find is that the 61.8 on this bracket, this large bracket, overlaps with the 38.2 on this small bracket. So we're thinking that there's going to be, and remember, this is where this $23, this is where the stock topped previously. So we're thinking that that DreamWorks is going to find a lot of support right here in this 2250, 23 area. But what if it doesn't? What if the market goes up and it keeps going up starting tomorrow? And I'm thinking this stock won't go down unless the market drags it down. I would say try to pyramid into this position. So take small positions. So let's say you have $10,000 and you want to put $2,000 into DreamWorks. You start with, and like I said, the options are a little pricey right now, so unless you want to do an exotic like spread trade, I'm just going to do this example with stocks. So you can start with $1,000 now, and then once it gets to a new 52-week high, do $1,000 later. Now, like I said, the good part about doing this is that if it goes down to this level, you're going to lose, let's say, $1,000 minus about 4%. You're going to lose $40 or $50. So you could probably live with that. And then once it gets above here, that'll confirm that's in an uptrend again. And even though you'll miss out on this area of profit, which is about $1, you'll be in a lot more of a safe position. And then once again, our target's around 35. All right, so that's the trade that I'm looking at. And keep an eye on this one in the coming days. If the market corrects and this thing still outperforms, even if it does decline, you've got a really good trade on your hands for when the market turns around. All right, thanks for watching and happy trading.